Yeah, now we're talking. Now we're talking back to work tonight. What a fantastic day today. Hope you guys made some money out there. Some beautiful range rotations we talked about in last night's video. How did it go again? Failures around the edges, traps as it rotates. I know a lot of you guys did pretty well with those with that game plan for today. So well done on that. But let's get refocused here tonight. We got one more day left. We just had some huge earnings come out a few minutes ago. We've got big non-farm payrolls tomorrow. And tomorrow is a Friday, one of my favorite days, and hopefully one of your favorite days to trade as well. We have a lot to cover in a very important video tonight. I'm going to cover some great trade setups I'm tracking for tomorrow. Then we have a game plan to make some moolah on Friday. Before we jump in, though, and get our hands dirty on these charts tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video. And if you enjoy these video lessons, do me a favor, will you? Hit that like button for me and give me a shout out. Give me a holler. Say hi in the comment section below. Either way, all kidding aside, though, thank you so much for tuning in, supporting the channel. Enough of the intro, though, JJ. Let's get this party going. There are some great trades setting up here as we go into the last day of this first week of August. Now, let's start first tonight on the 60-minute chart. I get the S&P and the SPY. I get the Nasdaq and the QQQs. Remember, guys, I like to use the 60-minute chart to give me a bigger picture look. It makes it easier to plan the best trades for the following day. And then later on tonight in the video, I'm going to drill down, like always. We'll go to some faster time frames, some tick charts, and we'll use those tick charts to put together the best entry strategy, the entry timing, the entry triggers to capitalize on the bigger picture stuff. So we're going to cover a lot of details here in the video here tonight. On the 60-minute chart, though, right now, everything's pretty bearish, right? We're still pretty bearish here overall on the 60-minute, but you'll notice here, and we'll go into a lot more detail here in a moment, we're sitting at some quite a bit of significant support on both the S&P and the Nasdaq, and you'll notice we've got some big ranges up above us here. Ranges act like magnets. So think about it, right? We're sitting at lots of support down here. Range above us acts like a magnet. Now, a lot of bearishness, so we're probably going to see bears are probably going to try for some breakout pullbacks, right? Breakout pullbacks. I would imagine some breakout pullbacks. We definitely have some short setups we're tracking for tomorrow. That's a given. But at the same time, though, like I mentioned last night on the video, all of this support down here, we have a lot of what I think some great reversal opportunities here on the Nasdaq and the S&P as well. So I think reversals in both the long side and the short side are going to be probably where the money is made as we go into the end of the week tomorrow. So we have a lot to cover, both long side and short side trades talk about here tonight. Now, before we jump into those tick charts and get serious about the actual entry tactics I'll be looking for tomorrow morning, why don't we grab a look here at the schedule for tomorrow, because there are three things that you want to have on your radar. First thing is this employment number coming out tomorrow. Now, you know me, I always try to warn you guys, be careful around this number, right? The employment number, the non-farm payroll number tomorrow morning. It's just like the FOMC announcement where it can be really, really wild and whippy. So give yourself about half an hour on both sides of the announcement tomorrow morning. But that is, of course, the big news that we know of, at least right now at 8:30 Eastern time. The second thing you want to be aware of is you may have heard. We just heard from Amazon and Apple. Both of them seem to have exceeded their expectations or their numbers, but you know the markets are going to tell us how they want to react to that. So right now we'll see how they react overnight here tonight and into tomorrow. That, of course, is probably the most difficult part of my job tonight, because it's almost impossible to tell how the markets will react to that. That is a big kind of question mark that we have right now. We don't know enough about that just yet, but we'll definitely watching for and anticipating potentially some volatility in the reaction of that overnight. So just be aware of that. Be careful after hours in Asia, in Europe, overnight here. And the third thing that you want to be aware of is tomorrow's a Friday. My mindset on a Friday morning is always to try to find entries, get into trades as early as I can, and then Friday afternoons, right? So 11:30, 12 o'clock, 1 o'clock Eastern time. Fridays love to run. You probably have noticed that. So my mindset on a Friday is always get me into something as early as I can while liquidity is still pretty good. And we'll talk about my favorite setups here in a moment. But I always try to leave a little piece of a position open on a Friday because, like last Friday, a lot of times they'll keep running and running and running. And sometimes those runners can make your entire week, your entire month on a Friday afternoon. So 3 things, right? Employment number. Please be careful around the employment number. Reaction to the earnings here tonight is definitely a big variable that unfortunately I don't control, and I'm waiting to see, like everybody else, as we open up in Asia. And again, mindset, early in, leave a runner. Let's finish up. It's been a great week so far this week, and we'll finish up hopefully with a nice big run tomorrow morning. Now, back to our charts though, because the money is made on the charts. It's good to know when the news is, but we're going to trade off the charts tomorrow morning. Now, let's go over my favorite trades here. We'll go to the S&P and the SPY first. We'll finish up tonight on the NASDAQ and the QQQs. As I had mentioned before in the introduction, we're very bearish right now, right? But we're sitting at support levels underneath, right? Underneath big trading ranges. I certainly think there's probably going to be some short setups on a breakout pullback, right? Off the underbelly of that trading range. I like that idea for tomorrow. I also think too, as we saw today, a lot of wicks at the bottom of the candles. You could definitely felt like there were a lot of buyers who were buying into this. Now, the only variable right now is that earnings report and how the market reacts to that. But all things equal right now, though, I think there's money to probably make, right, on the bounce, reversals off the low. And so I think both sides can trade this. Now let's go down to our tick charts, right? Because the tick charts are really where, at least in my eyes, tick charts are easier to plan entries. Just the way they look, the way they act. They're much easier. This is a 6,000 tick chart. I dropped it down to a 6,000 tick chart tonight because volume was a little bit lower than we usually have going into Non-Farm Friday tomorrow. And this is the 21 EMA in case you're watching here for the first time. Now, what's the most important factor right now on this chart? It's very simple. It's what we call a directional range in our trade room. It's a bullish move up into a trading range. Now, if you watched last night's video, you probably kind of know how this goes, right? So ranges are magnets. Ranges are balanced areas. So what we basically do is we find areas of support below, we find areas of resistance above, and we look to trade what's called rotation. And as I mentioned in the introduction, we have a kind of a pretty simple and very specific game plan to do that. We're looking for ultimately reversals, right, off the lows, reversals off the highs. And to do that, what were those 2 patterns? You guys are learning these in the free trading classes, right? What were the 2 patterns again? It was failures, right, around the edges. So at the low, it'd be a seller failure pattern, right? It was failures around the high. It'd be a buyer failure pattern. I'm going to go over more of this in a moment. Don't you worry. And then as it rotates back and forth, what do? You look for what's called traps. Okay, so 2 setups, really the kind of the bread and butter in a range bound market are failures and traps, and we'll talk a lot more about that. Most of you guys are learning this stuff in the free trading course, so you probably already have a pretty good idea of what those look like. Now, later on in the video tonight, we'll talk about what a breakout might look like, right? Because as we rotate back and forth, we may break down. As we rotate higher, we may break out. So I do want to talk about breakouts, and we're going to cover all the details. Because remember, the money is not making predictions, right? We don't want to make predictions. We want to be ready for no matter what these crazy markets are going to throw at us. So we'll go through some different scenarios. That way we have a game plan to make some money no matter what the market throws at us. So right now, let's talk about really in a bullish move like this, into a trading range, you really want to try to buy off support levels, okay, underneath that trading range, okay? There's a lot of different ways I want to look for an entry pattern on this. Let's talk about kind of the simplest one, which is as we go lower. Now, remember, remember, this is where the 60-minute time frame comes in handy. We're not an overall bull market right now, right? We're pretty bearish in the short term. So as the market goes lower, if I want to be a buyer down here, I need to, well, I don't want to pick the bottom, right? Trying to pick a bottom can be very difficult when you're going against that overall bearish momentum. So what I'm going to do is I'm going to look for a pattern that looks just like this, right? Or a variation of this. Rather than trying to pick that bottom, I'm going to try to anticipate the bears coming in and let them try a couple times, right? Once those bears come in and try a couple times, now we know where their stops are, and they can use their stops as kind of fuel to fuel this thing, right? Going higher. This is what I call a failure pattern. This would be a 2-try failure because, again, we've got that 60-minute direction is so strong going lower, right? Now, after we find that failure, and again, the idea behind this is pretty simple. We're trying to trap those bears in around support, right? You'll notice I marked the amount above, the amount below. We got channels down here. We got swings down here, right? So support levels below that trading range. If I can get these bears trapped in, I can use their stop losses, right, to fuel that squeeze going higher. Now, your job isn't done at this point. This is where that trap comes in. So as we begin to go higher here, this is really, if you want my opinion, my favorite entry pattern is this one right here. It's a trap setup. Okay, I'll use these anywhere I can possibly find them around the edges of these ranges. These are called trap patterns. You guys are learning these in the free trading class, right? Remember how it goes, right? Remember, strong move, shallow pullback, higher high in price. And what do we always say? Right? Traps, baby, right? Fun setup. Love a setup. So a failure, right, into kind of that pullback. But again, I like to look for traps, especially in an overall bear market. Now, don't forget, I teach all of these in a lot more detail in our free trading classes on our website. If you're not making consistent money right now, the markets are way too good right now not to be making money. I'm going to put a link up there for you in the upper right-hand corner, and I'll make it easy for you. Grab that link and take that free trading course, because the strategy you'll learn in that little short video series will teach you a simple trick we use every morning in our trade room to know exactly where the best trades are going to be that day. And then to help you get into some winning trades, start making money on your own, I'll teach you my 4 favorite entry patterns to time the perfect entries. Grab that link, take that free trading course, hundreds of examples of what I call failure into pullback combinations, right? That failure into that trap combination. Also, too, what I'll do is I'll put all the important links I talk about tonight down in the description of this video here tonight. Just in case you can't grab that pop-up, it'll be down in the description for you. You definitely want to grab a copy of that free trading course. Now, we have a couple other variations of this that I want to go over right now. So, for example, I would like to take out that pendulum swing, right? Pendulum swing, levels down here, really anywhere down here. I'd like to be buying that failed breakout, that reversal off the low. But let's say, for example, we have this channel coming up here right now, right? Let's say, for example, they bounce off that channel, they try to go higher, and then we get something like this. Okay, this will happen a lot. I don't want to buy in the middle of that trading range. Okay, you want to try to buy the edges, right, around support, around those edges. So if we have the bears trying twice, what's my concern right now? My concern is I'm buying too high, right? And you guys know this probably, but what's the best entry pattern? We teach this in the free class. What's the best entry pattern to avoid buying high, right? It's a trap pattern. So a slight variation of this 2-try failure. Again, if we go lower, it's a lot easier now. 1, 2, right, and then back up, because now I'm buying nice and low, right? I'm buying nice and low. But if I have a situation where, and again, this is why I said earlier, we want to think about different variations of this, because although I would love to get the textbook perfect setup, we don't oftentimes get it. So I want to make sure you guys know how to adjust to changing conditions. If it bounces up really quickly here, right, I want to look for bears once, bears twice, and try to buy as low as I can. It's basically a trap setup, but again, it's ultimately the bears are coming in, trying a couple times, and we are still using their stops, right, their pain as a way to fuel that move going higher. Okay, these oftentimes happen like this, where we may end up running lower, and they'll pop right back up so fast because there's so many buyers down here that what happens is it pops up and it goes like this, right? Like that, okay? Now, look at this one right here, right? These are tough. These are one of the harder ones because V-bottoms, you know, unless you enjoy some pain, maybe you do, but buying into those V-bottoms can be a very, I'm not a fan of that, right? White-knuckled, stressful, anxiety trade like that. Those types of trades, I swear, are not worth the money. I swear it takes about 10 years off your life. So I'm not a big fan of just simply buying into those big V-bottoms. I would rather wait for it to pop up and then get those bears, try to short this thing, and then again, right? Think about that bear trap, right? So again, kind of a variation of that setup. We're still using 1-2, but again, because it bounces so hard, we're trying to buy as low as we can, right? And get that trap there. All right. Maybe you like wooden roller coasters. Maybe you like looking over the edge of those suspension bridges right up around the Grand Canyon, right? If you like that type of stuff, maybe you will buy that V-bottom. Count me out. Count me out. I'll keep my feet on the ground. Thank you. Anyways, all kidding aside, that's another variation that I'm looking for. And then one more thing too, double bottoms. So let's say news comes out, market races lower. Anytime we see a range like this, okay, anytime there's a range like this, the underbelly of that range oftentimes creates resistance, and we may end up seeing that strong run down. They may roll over and retest that low. All right. Again, I'd like to get that 1-2 and then buy it back up. But hey, again, may not happen. We may end up pulling back and running right back to retest that low. Now, not a lot changes in this situation. Okay, we're still pretty much a range-bound market with an overall bear bias. In this situation, though, think about who is participating in this situation. The experienced traders, the professionals, right? They're coming in and they're selling high, right? Where would those sellers take profit? They will probably take a big chunk of their profit off at a retest of that low. Now, who's coming in now? Who would come in now and sell right now? Who would sell down here? Inexperienced traders, right? Traders who didn't dare sell the pullback the first time around. These are rookies. Rookies have small stops, right? Small accounts. They can't defend themselves. Rookies will frequently flip their position the minute they think they're wrong. So once we see rookies come in, and we know they're rookies because professionals would not sell down here, they may sell once we see proof of that breakout, which I will talk about here more in a moment. And guys, don't click off on yet. I'm going to talk about going higher here because we definitely have potential for some reversals back down. We get some major levels of resistance. So I'm not done here. I'm nowhere close to being done here tonight. I will give you guys a game plan if it goes higher here as well. Don't bail on me here just yet. I know our attention spans these days are a little bit lower than they used to be. Anyways, all kidding aside, now what I'm going to do is I want to rope those bears in, right? When I rope those bears in, again, think about it. Professionals are taking their profit right here, right? They're buying their way out. If I can get sellers trapped in around these double bottoms, this is what my first mentor would always say. This is an area where everyone's buying, right? Everyone's buying, right? What I mean by that is buyers are buying low, right? Range above us, big support on the 60-minute. And if I can get the bears trapped in, what happens if you're a seller and you get stopped out? What happens is you become a buyer, right? The only way out of that losing position, and again, a lot of rookie traders, at least I did when I was a rookie, and I'm constantly telling my new rookie students, do not flip your position. Wait for a new setup. It's an easy way to lose money on both sides of the market. But the bottom line, though, is if we can get the bears trapped in at support levels below a trading range, this is a scenario where when those bears, when they get their stops run, right, and that squeeze hits, that's because everyone's buying, right? The buyers are buying. And in this case, remember, we're not blindly buying this low, all right? I don't want to get those emails that say, Joe, you said to buy the low. I said to wait for the setup, right? Wait for the setup. We don't just trade levels. We trade the setups in the right situations off those levels, right? So trap those bears in and use those stops as fuel to run back where? Where do you think the targets would be on that? Target 1, back at the retest of that high, right? What I would do is go half off, right, at the T1, right? Half off at the T1, back up at that high, quarter off, up around the high of that range, quarter off, leave for the runner. And remember, right, tomorrow's a Friday, right? So these are one of those scenarios where you want to try to leave a piece of this to run. And oftentimes we'll keep going and going and going as that volume dries up there. All right, guys? So those are some really, I think, pretty simple variations of the basic idea, right? The basic idea is get it down, trap the bears in, and get it up. And as it's rotating, you want that trap, right? Remember, if it rips up and runs higher, focus on those bear traps. Okay, now, one final question is, at what point going lower does this now turn into a breakout? Well, in our video classes, we talk about a pattern called a 1-2-3 move. If you're a student of mine, you know what this means. A variation of this is called a 1-2-3 breakout. Okay, it's pretty simple. We need to get a strong move down, get out of this range, and the bears have to hold the pullback and they have to jump right through that low. It hasn't happened. It didn't happen today, right? Break down, didn't hold the pullback. Break down, didn't hold the pullback. Break down, didn't hold the pullback. So we don't trust, remember, we never trust this first leg. Okay, the first leg is irrelevant. Okay, that first leg could go racing down, but again, we'll wait for the pullback, wait for those bears to come in, try to keep it going, and if they fail, we'll look for that long going back up, or if they retest, right, 1, 2, back up. If they take out this low, right, if they take out that low, if they hold that pullback and they jump off of that moving average, this is that 1, 2, 3 breakout pattern. Okay, we then know this now is a breakdown, and we ultimately now start looking for a channel off the low. What I'll usually do is pin those channels up around these highs and start looking for what's called a breakout pullback, right? Wait for that breakdown, wait for that pullback, and then use a failure pattern or to short off of that high. That'll be something we'll have to cover more tomorrow once we see more of what we're getting at, right? So make sure you come out and join us in our morning trade room, right? We'll talk more about how to trade that breakout. Unfortunately, I can't cover everything and keep these videos within striking distance here on YouTube. All right, so now you guys know more of the game plan, right? A buy it off the low, some variations. Now let's talk about going higher here, right? Because bullish range, overall bear market, bull range. Why don't we go grab a look here now at the Nasdaq? Now, the Nasdaq, different, obviously very different than the S&P, but quite similar when you kind of look at it in context. We're bearish right now, right? There's no doubt about that. We're bearish. However, right, you'll notice that whether it be a symmetrical two-legged correction off the high, or whether it be a range symmetrical rotation off the high, or whether it be sitting at support levels below that trading range, we are at quite a bit of support. Now, that doesn't mean we can blindly buy this, right? We can't blindly buy this low. But like I mentioned earlier, I would expect that sellers with all of that momentum will be trying to pull back and sell this thing going lower. It's a given. I would also expect that as we try to retest these lows, double bottoms, take out some of these support levels, I would also expect buyers to be waiting down here to trap those bears in and try to make our run back up into these ranges. All right. The big variable, unfortunately, right now is those earnings, right, overnight. It's the one big variable I unfortunately can't control here right now. So over to our tick charts now. This should look very familiar, right? This should look very familiar. It's very, very similar that we have on the S&P. Now, one thing the S&P and the Nasdaq, they have a lot of things in common right now. It's a bull market into a trading range. So that same exact plan I gave you 2 seconds ago is the same thing will happen here on the Nasdaq as well. Resistance. We have quite a bit of overhead resistance right now on both the Nasdaq and the S&P. On the Nasdaq, it's the 5.925. On the S&P, what is it? It's up around that, 53 and 3/4. You can see these levels are marked up, of course, on the 60-minute, 53 and 3/4, right? I've got, what was that here, right? 590 right up above us on the 60-minute on the Nasdaq. So we're overall bearish, right? We're bearish at least right now. So I got to be careful as the market rolls higher here. Now, we talked about the game plan if we go lower. That's kind of the easy one. If we end up racing higher here, right? If we end up racing high, remember, a lot of news coming out right now, earnings, big non-farm payrolls tomorrow. As we're going higher, Okay, as we're going higher right now, what do you think is the best way to trade a breakout going higher? Well, first of all, the best way to do it is to look for bear traps. Okay, so we start really racing going higher. I want to avoid buying into those highs. And so really at this point, right, it's bear traps, right? Bear traps, of course, strong move, shallow pullback, higher high in price. It'll look like that, right? It'll run up. It'll pull back. It will barely miss the moving average. It'll be a higher high in price. It'll be a trap right there, right? So that pattern, first of all, if we don't get that rotation lower, like I hope we do, I think every buyer hopes for that. If we start racing and running higher here right now, right, maybe it gaps up at the open here in Asia, whatever the case may be, you know this one pattern, right? The one pattern you're looking for here right now is that trap pattern. Right? That's the moneymaker on the way up, right? On the way up. And then what we have to do is wait and see how we react to major resistance. Okay? If we are successful at breaking through major resistance, we then start using these highs that were resistance overhead as support. Right? So imagine now we can flip this now and turn this from right an area of, let's say, resistance. This now flips now into an area of support, right? So if we break out and run higher, we now remember, very, very important. This is not a bull market, okay? It's a bear market for now, okay? It may not be tomorrow, but right now it's a bear market right now. So who's waiting up here? Bears, right? We have to assume that on the 60-minute, on both the S&P and Nasdaq, as this goes higher, who's waiting up there? Bears, right? To whack this thing back down. This is very important because if we do race higher, I got to be very careful buying high up here. Again, think about now, get rid of this channel. Think about now how these areas of resistance can now become areas of support. Okay, and what usually happens in these very strong breakouts is we'll get this strong breakout as we're going higher, right? It'll be bear traps, okay, on the way up. I'm going to buy as low as we can, okay? And please don't take this literally right in this area, right? And then that high. It could be anywhere on the way up. Nice strong run, shallow pullback, higher high in price, traps, right? Okay, then what happens is now these areas now become levels of support. Okay, and watch closely. What I'll do in this situation is I'm going to go out and start drawing trend lines off the highs. All right, I'm going to anchor them off the highs. Okay, that's the trick to these. You find that trend line off the high, you bring it down off that low, and you wait for that correction. Okay, this correction is going to come in because everybody who bought will take their profit. And of course, there's a lot of bears up there, we assume, right? And we want to wait for now that breakout pullback. Okay, don't let that pullback fool you into thinking this is a reversal. If we have enough strength, right, pop up, hold the pullback and jump, if we could break through these key areas of resistance, now those levels overhead, now those range highs, now become key support. Watch the 21 moving average. Okay, the 21 moving average will come up and we'll get underneath that 21 EMA. Okay, this is where the magic happens. Now, trap those bears in. Right, get those bears to come in and try to short this thing back down again. Once those bears get trapped in, right? Once they get trapped, now we use that failure pattern to buy right into their stops. And the objective here right now is to go back to retest the high. And also, too, that first leg, right? That big breakout leg, that's the measuring leg. So that leg becomes the measuring leg, and we then pin it at that low, and that gives us now a target for the runner on Friday afternoon. All right. So this is, and obviously I'm just simply illustrating this right now. It'll be messier than this, I'm sure, tomorrow. And you'll get really good at this eventually in real time. That's why, of course, we have a trade room to make sure you guys are watching this stuff correctly. But this is the basic principle of what we're looking for if it does, again, kind of break and accelerate, right, as it goes higher. It's in the short term, it's bear traps on the way up. And then as it gets a bit too high up, right, as it's too high, we don't want to buy way up there. We don't buy as price goes higher. We buy as price goes lower. And my favorite way to do it is to look for that. Again, get under the moving average, trap around the low of that channel, right, and then get those failures, right, maybe a pullback combination if we can get into this thing before we go back up. Again, retest the high. That's the big target, right? And then the runner target is the size of that first leg. Okay, take that size, pin it at that low, and that will give you an idea. Obviously, I can't give it to you right now, right? But that'll give you an idea of how big that final target, that runner could be here. All right? Now, overhead resistance. how do we short this thing? All right, how do we short this thing? There are 3 different ways I can short this sucker, okay? The easy one, remember how we went lower earlier, right? We talked about earlier how it's failures, right? 2 tries here, okay. It's pretty much the exact same thing as we go higher. So if we go higher here right now, what's my problem? My problem is what? It's momentum, right? If we go higher, okay, if we go higher, right, that's a lot of momentum, right? So if I want to sell short off the high, given I know the 60-minute chart is pretty bearish overall, but I have to absorb that bullish momentum. We're not in the business here, guys and gals, picking tops and bottoms. So as we go higher here, a couple things you want to think about, right? As we pull back, if the buyers hold that pullback and jump, right, that's that 1, 2, 3 breakout I mentioned earlier on the S&P. But if we start seeing these buyers struggle, right, and struggle, now look at the difference here. Look at the difference on this pattern. Remember the one before? I said strong run, shallow pullback, higher high in price. That's what a trap looks like. Okay? Make sure you understand the difference here. Higher high in price, trap low. If we run up and the buyers pull back now and they're going, remember, buyers want to buy low. Okay? Buyers want to buy low. So as it pulls back, the buyers come in, they try once. Okay, it's too bullish right now to short right now, at least in my opinion. This is my opinion, right? Too bullish short in my opinion. The buyers pull back, they'll try again. They'll want to buy low because that's what buyers do, right? They want to buy at a discounted price, right? So trap them in as it goes lower, right? Those buyers come in, and there's 2 ways to trade this. One, think about where stops are. Right? Think about where stops are. That's the easy way. It's the failure pattern. The real primo setup is that bull trap right above that high, which may be necessary for that bull trap short if we have some trend lines coming up like that, right? Very difficult to short below that low. I'll look for traps in that situation to avoid selling right into a trend line like that. Does that make sense? Right? Remember, we talked about this earlier this week. You will be thinking about risk reward, right? If I'm worried about shorting into that trend line, right, I need to make sure I'm getting traps to sell as high as I possibly can, right? But if we were to go, for example, excuse me about that, if we were to go up like this and buyers once, buyers twice, right, and there's no trend line to worry about here, now I can short that thing because, right, my risk and my reward are balanced. So a lot of this will depend on what it looks like once we get up there. But that's the general idea. Now, there are variations of this, right? Let's say we run up and we V-top. Okay, we get whacked back down and we start grinding down. Okay, these are really tricky because what's going to happen is, like I mentioned before, we don't want to chase it. Right? And it's very difficult to predict that top, right? Unless you're one of those psychopaths, right? I'm kidding with you, obviously, right? That enjoys that type of stuff. Okay, if that's your thing, then by all means, right? I'm kidding with you. I don't mean to insult anybody. But all kidding aside, though, right? Unless you like a little danger in your trades, I'm not a big fan of simply shorting into those big spikes like this. I would rather wait for it to roll over, right, and run down a little bit, and then once I see it grinding down, these get pretty easy. I'm going to mark off that low, mark off that high, look left, and we start finding those bull traps, right? It's exactly like we said earlier. If it goes lower and bounces back up, what do? You don't chase it. You do what? You buy as low as you can with a bear trap, right? You're buying low. You're buying as low as you can here, right? Remember, you make your money when you get in nice and low. You make your money when you get short nice and high. Okay, this is why we love traps. This is why traps are my favorite, right? They're so useful in so many ways here, okay? So keep an eye on that variation. Also, too, we run up, right? The buyers pull back. They retest the high, right? They retest the high. Remember this earlier? Double top. What do? If they break through, it's a 1, 2, 3 breakout. Find that new channel and buy that breakout pullback. If they struggle, right? Now we've got their stops, and now they can look for that drop, right? Going back down. Now, double tops like this, right? Not only can you short that 2-try failure, buyers once, buyers twice, and shorten their stops, you can also go out, look left, find a new channel off the low, up around that high, and find that trap from there. This is oftentimes the better trade, this follow-up trade. We call this the first test, right? The first test off that new channel. As it rolls over, we're not going to chase it, right? We don't chase the market. Get that out of your vocabulary. Do not chase the market longer because everybody who sold short up here, they're taking their profit down here, right? So once you short that thing, you're literally taking the other side of professionals who sold the top up there. Okay, you don't want to take that short, right? Not down here. Okay. Once this thing pops up though, now find that channel, right? Now look left, and this could be any of the entry patterns, traps, failures, pullback combos. It doesn't matter. All right. Any pattern you guys are learning in that free trading course. All right. And again, right, if they pop up, if they hold that pullback and they blast, right, and run through, we're finding those big channels, right? We're grabbing those breakout pullbacks and looking for retests of that high. All right, guys. There are a lot of other variations I could go over here tonight, but we'll leave it here from here. I have a lot more I could share, but we'll do that more in our morning trade room, which reminds me, right? Tonight, the game plan is put together. We got big earnings overnight tonight. We've got, of course, big news coming tomorrow. It's easy game planning, right? The hard part, though, is dealing with the curveballs the markets throw at us every day. And I'm sure tomorrow will be like this week so far with some curveballs. So tomorrow morning, be there with us, 8 o'clock Eastern time, every morning in the trade room. I'll put all the membership links. I'll put all the free class links. I would recommend take the free trading classes first. Get your feet underneath you. Learn the basic setups, right? Get your charts all set up and get going the right direction. That you'll be ready to go. Be warmed up trade with us sometime soon in the morning trade room. If you got questions, if you need help about anything we talked about tonight, don't be afraid to call the office, send us an email, use live chat. We're always here if you have questions, all right? So do not be afraid to reach out. Don't be a stranger about brokers or data feeds or anything we've talked about tonight. I'd be happy to answer questions as well. All right, guys, great job today. Great job this week. August is always a bit of a challenge, right? It's slower, but I'll tell you, I think of the month of August like training camp. It's going to make you more disciplined. It's going to build those patience muscles. It'll get you ready for the best time of the year, September, October, November, December. So think about this month as a chance to really sharpen your knife and get ready for what really is the best trading of the year, only a few weeks away. All right, guys, thank you so much for watching all the way to the end. You are the person I do these videos for, so well done on being committed to learning this stuff. Now get out of here, enjoy your evening, get a good night's sleep. Tomorrow morning should be a busy one. Remember, early in, leave that runner, and keep in touch if you guys have any questions. Guys, be well out there. Be nice to each other, will ya? Enjoy your weekend. We'll see you guys in the trade room, and we'll see you guys next time. Adios, amigos. Bye-bye for now.